A challenging market is expected to continue in 2025 thanks to higher mortgage rates as well as limited supply. Jonathan Miller of Miller Samuel is staying optimistic. He says, while we don't expect sales to rise to normal levels, they will be higher than last year. Those who can afford to buy at higher rates will probably do so. Mortgage rates will probably end up lower than they start the year, but not low. Jonathan joins us now. So, Jonathan, you have actually noticed an uptick in existing home sales, in particular in high-end markets in places like New York.
Yes, that's actually been the story. If you think about it, many potential home buyers have been waiting for about 3 years since the initial Fed moves. And I think time is sort of running out for people as life moves on. We're already seeing in contract activity in some of the markets that we cover really begin rising back in the summer, not just after the election. But of course, on the national front, existing home sales for the last couple of months have been up, which means that, with all the sort of people holding, waiting for lower rates, I still think there's a thinking that, perhaps a year from now, rates will still be a little bit lower, and those that can afford to buy are buying. The challenge is supply. Supply continues to be a problem. It's less of a problem in the Sun Belt states where there's been a lot more development activity, but still, a year from now, I think housing prices are going to be higher than they are today, and so you have to sort of, make the decision of, do you wait for rates to come down at some point? If they will, it doesn't feel like it with the incoming administration's economic policies.
So you mentioned the Sun Belt and this idea that it is rising, the inventory that's available. People point to that and say that they want to move to somewhere where perhaps housing is more affordable. But it's misleading, though, when you look at supply increases as well, because we're coming off a pretty low base. How often is it that people go over and realize actually the picture here is very different from what they had anticipated? And if you compare it to, say, 5-10 years ago, it's completely different.
Yeah, I think post-pandemic, there's still an expectation by consumers when they go from, say, the Northeast or California to the Sun Belt that they're going to get a very low price, and the affordability is going to be dramatically improved. However, that's been where a lot of the price appreciation has been concentrated. As people with work from home are looking at other places to be situated. One of the things that we're seeing in, for example, markets like Florida, especially South Florida, is that the higher end threshold, meaning pricing north of, say, $1 million, not to be cavalier about the numbers, we're seeing a tremendous uptick in activity. Perhaps that has more to do with elevated financial markets than it does to the factor of higher mortgage rates.
Jonathan, given the fact that there are higher mortgage rates, are there deals to be had on the price when going out and buying a home?
I think the simple answer to that is no. But that's because even in markets where inventory is rising or there's parity with pre-pandemic conditions, the demand is still pretty strong, that people have been kept on hold for several years. So we're still seeing bidding wars. We're still seeing a fairly tight market. We're just not seeing a lot of discounting going on, and I think that's what consumers, were hoping for.
You expect an uptick in 2025. Where exactly do you think we can see an uptick in some of this?
Well, the basic math is where the inventory is the tightest, that's where you're going to see the most uptick in price. I would say that the biggest uptick in price is not going to be in the Sun Belt. It's going to be to the north of that, because that's where not as much new product has been built to come into the market. That's one of the challenges in markets in the Sun Belt, is that there's been more new construction as developers are anticipating the boom coming off the pandemic, and it's been a little bit overdone.